Hey everybody, and welcome to The Void, a show dedicated to filling the void between being an employee and becoming self-employed. Most people refer to starting your own company as taking the leap, as if they're blindly jumping off a cliff and into the unknown. This show is here to help you understand that it doesn't have to be that way. As always, if you like what you're hearing on the show, please do us a favor and help share The Void with somebody else who might also be wanting to start their own company. David and I saw an opportunity to help others understand that self-employment is well within your reach, and just as our businesses have grown organically and by word of mouth, we want this show to grow the same way. And for that to happen, it takes two things. We have to give you guys some really great content, and you guys have to help share our valuable message with others. I'm your host, Mitch Smedley, and with me as always is David Hilton.
Mitch, what's up, buddy?
What's going on, dude?
Where's Marcus? Is he here, or does he sleep in the back?
Oh, he's here.
Is he?
Often
How's
heard.
it going, guys?
Never seen.
How's it going?
It's good.
Yeah, the elusive Marcus.
I like these guest episodes.
Yeah, they're getting fun.
The first one, it was pretty good. A little
Yep.
rough.
Well,
because
it's
we
his
didn't,
first guest episode, right?
because we didn't know what we were doing.
Right.
You know.
So
But
they get better every time.
But Tyler was great.
yeah.
Now we've got Mr. Jeremy Mercado,
We do.
What's
we do.
going on?
the home loan advisor
Yeah.
connoisseur. I guess is that how you would say it, or no?
I mean, that's pretty humble.
Yeah. It's pretty humble.
The home loan expert extraordinaire, baby.
Yeah.
Expert extraordinaire. I like that a lot.
That's
Yeah.
right.
That's really good. I really like it.
So we're gonna dive into a little bit of what Mr. Mercado does here in a few minutes.
J-Dog.
That's right.
J-Dog.
Call me
We decided
He's been
in
on the show
pre-production
for
is-
about 43 seconds, and we've already got a nickname for him. It's
Yeah.
J-Dog.
He's got a great personality.
Love
so
it.
it's J-Dog.
J-Dog.
That's
That's
what we're
right.
calling him from now on. I mean, not
Hell
to
yeah.
get Mitch off topic of what he was talking about, but I like to do that. I like to
I'm
challenge him a little
always
bit.
off
Make
topic.
him think about something.
Right.
So,
So you just call me J-Dog through the whole
J-Dog.
podcast.
J-Dog.
I like it.
Perfect.
Mr. Mercado.
Yeah. Okay. So as we're going through with Jeremy on everything that he does and all the challenges that he's faced and everything else, we're going to be tying those back to our 6 core adversities that you're going to need to be overcoming if you're planning on starting your own venture. So I'm going to go through those real quick. Number 1 is personal finance preparation, making sure your personal finances are in check before you step off onto your own. Number 2 is business finance preparation, and that's going to cover finances for the business, how you're going to come up with the money and kind of the budgets that you're going to work from. Number 3 is systems preparation. And this actually, there's 3 episodes that it takes to cover systems preparation. So these are all the rules and the systems that your business is going to work from and work within. It's kind of your playbook, so to speak. Number 4 is community involvement work. And we capture all of our community involvement work by sharing it on social media using the hashtag #FindTheNeed, So community involvement work is a great piece to make your business explode while helping your community at the exact same time. So that is episode 7 if you want to check out that one. Step number 5 is wake up, do work, and repeat, or as all the young kids call it nowadays, hustle and grind. I hate those words.
Not
so
hustle
we call
and flow, hustle and grind.
it right.
I love the reference.
We call it wake up, do work, and repeat. And then finally, the 6th step or 6th adversity that you're going to need to overcome is you're going to need to learn how to evaluate your performance, make adjustments, and then improve on that performance. And that is covered in episode 9. So if you're just now tuning in, if you go back and listen through episodes 1 through 9, that'll get you covered on all of the 6 core adversities that you're going to need to overcome. And then you can just jump right back into this show at any time. So now that you kind of understand the framework of the show, let's dive in a little bit and learn a little bit about Jeremy Mercado. So, Jeremy, tell us a little bit about who you are and what you do.
Well, my name is Jeremy Mercado.
Yeah.
A.K.A. J-Dog.
J-Dog.
That's right, J-Dog. I am a residential loan officer for mortgages.
Okay.
So I don't know how far you want me to dive into it, but I don't know if that's pretty self-explanatory. In summary, I mean, if you are looking to buy a house, I'm the person that you're going to be talking to.
Right.
Actually, before a real estate agent, believe it or not.
Right.
So people think,
Oh, really?
Yeah. So people think, You know, when you're trying to buy a house, I gotta contact the realtor.
Right.
Well, would you take a girl out, not knowing how much money do you have in your bank account?
Right.
You know, would you say, "Oh, hey, girl, let's go to Capitol Grill," knowing damn well you have $5 in your account? So why would you go shopping?
Yeah.
Right? So why would you go shopping for a house and you're like, dang,
Yeah.
I don't know what I can buy.
I have 2 cents.
Right.
Yeah.
You know, so you talk to me, and believe it or not, I mean, a lot of people actually don't understand the home buying process, and so I kind of act as an advisor as well.
Right.
And also, I mean, this is also my previous role in the past, but I actually make a larger impact, I think, on people's personal finances, because we talk about credit, we talk about setting aside reserves before buying a house, because if things break, you know, call Mitch for your plumbing needs, but
Right.
selfless plug.
Or someone cheaper.
We are shameless.
That's right. But yeah, I mean, people have credit that needs to be worked on, or save some down payment, stuff like that. And
Right.
financial advisors usually don't talk to clients that have less than 100 grand. So we're kind of
In between
in
there.
between.
Yeah.
Yeah.
That's
Yeah.
right.
Like financial advisor / not real estate agent, but real estate agent / mortgage advisor / whatever
Everything.
you've got to do to make that sale, right?
That's right.
That's right.
Now what you do is kind of a little different though, because you're not a standalone business necessarily. Like you're not an LLC. You still get a W-2.
Mhm.
So you're kind of like hybrid, self-employed but yet employed.
In a sense, yeah.
Yeah.
Kind of like Jay-Z, right?
Can
I'm
you
a
break
business
that
man.
down like in a layman's terms? If you're not, but you are.
So yeah, you're basically self-employed within the framework or the shelter of a bigger entity.
Basically.
Is how that's kind of working, right?
Yeah.
So you have all of the risks and challenges as a self-employed person, but you
Right.
do get a little bit of the security of the bigger entity.
To an extent, yes.
Yeah.
So especially in any job involving real money, you know, you're dealing with people's largest personal asset, right? You're buying a house.
Mm-hmm.
I mean, a house, you're not going to buy anything for, $5,000.
Right.
So whenever you are encountering people's finances, I mean, there's going to be a lot of red tape. So in order for you to avoid having to do that and never starting your own mortgage company, you're going to work under a mortgage bank.
Right.
And so that way you don't have to apply for your own licensing. It's like, hey, look, let us be able to do VA loans. I mean, there's a lot of red tape doing that. You're going to talk to a government.
There's a lot.
Yeah.
A lot of friends of mine, VA loans.
Yeah.
Right.
And there's a lot of paperwork. There's actually banks out there that don't do like FHA loans or VA loans because there's so much requirement and
Yeah.
there's so much capital required, especially for a mortgage bank, right?
Mm-hmm.
So there's a lot of this term within the mortgage industry where it's like, hey, are you going to sell my loan? Well, what people don't understand that are buying a house is when they buy a home, the bank usually lend their own money. And if they don't sell that loan, they're out of that $400,000 or however much that house
Yeah.
is.
Yeah.
Well, what if you only have $10 million?
Yep.
You're
Yeah.
telling me you're only going to loan to
You can only loan to 20
yeah.
houses.
Yeah,
Yeah,
exactly.
eventually, you have to sell to keep the doors open sometimes.
Exactly. Yeah. And so that way you're also like mitigating the risk.
Yeah.
You know, as for me, if I were to try to do that, I don't have $10 million.
No.
I don't know about you.
And and people are probably like, when Mitch said, hey, Jeremy's coming on the show, he's this and this, and that's what I thought of. I thought, oh, he's some big wig that's,
Right.
has all this money, he's
I'm a
doing
lot
all this
cooler.
stuff, he is really cool, I will say. I mean, I like him a lot. And I've only known him for maybe an hour now. He's, seems real down to earth. So when someone asks me, I will probably be giving out your information.
Oh, dude. Thank you.
But, that's what I thought. And people don't realize necessarily when you start a small business or have a small business, there are other guys like Jeremy
Yeah.
that even though it seems like it's this big business entity, no.
Right.
Sometimes it is a small business. Sometimes it is a guy just because he doesn't own the bank doesn't mean he's still putting his ass out there on the line.
Oh,
Right.
for sure.
You know what I mean? Just like everybody else is.
Right.
So, and I always like to encourage people, and this is all new to me.
Oh,
I did
yeah.
not realize any of this. I read his
Yeah.
questionnaire that he filled out before, and I was like, oh shit, and I learned all this stuff, and that's why we're having him on the show.
Right.
that's why I encourage people to use small business, and this is just another asset.
You get a lot better
of that
customer service from it.
Damn right you do.
Yeah, yeah. So, and that's what's, to put it into kind of a comparison, it's similar to like somebody who's a real estate agent who they're an agent, however, they're working under a large agency, say
a brokerage.
Yeah, they're not
Remax or something like that.
They're
So,
not a broker. They're pinned on someone else.
yeah. So like Remax is handling the red tape and putting their
Mm-hmm.
overlying process on it, but here they are kind of their hybrid self-employed, although real estate agents are,
Yep.
they're a 1099 employee, so they
Right.
are like true full-on self-employed, but it's very similar, only in your case, you just getting a W-2, but it's still very, very much like self-employed.
And there's two
So-
sides to it too. I mean, you made a good point about like, oh, who's this guy? Is this going to be a big wig? There are loan officers out there that run on a P&L model.
Right.
So profit
See
and
that?
loss.
Do you see the question on my face?
Right.
Yeah.
What?
So yeah, there are some loan officers that operate in that sense. So what happens is, yes, they're working under a company, but they get paid a higher percentage, but everything comes out of your own pocket.
Right.
Oh.
So you're like, oh, dang, if I don't sell any loans, I have loan processors, I have assistants, I have the lease to this place that I'm renting. Like literally everything comes out of your pocket. Right. So there's two sides to it. You could be an employee, you could be, I mean, you're still going to be a W-2 in that sense, but you're also running a P&L.
Yeah.
And funny enough, for your audience, I think people tend to go into business for the wrong reasons.
Yeah, absolutely they do.
Right. And so it's funny because I'm a W-2, but there are literally W-2 employees that are loan officers.
Yeah.
That are making millions of dollars.
Yeah.
Absolutely.
Yeah.
And there's really no cap. So this is the beautiful thing about it. Like you're an employee, you're working under the safety net of a large company, but there's no limit to how much money you can make.
Right. Yeah, that's an industry where you can go the hybrid model and still see the successes of being self-employed while having the, I don't want to say security, because, I mean, if you don't perform, you don't eat. So
And I get fired.
Right.
Yeah.
Right. So it's not necessarily securities of W-2s. It's just, again, handling a lot of the red tape
he's not
and
in
everything.
he's not in a union that's like, hey, okay, well, no.
Yeah.
You're see ya.
Yep.
You're out
Yeah.
the door,
Yep.
which is the same as operating your own small business.
Right.
You don't cut it. See ya.
Right.
You're out.
Yeah.
Yeah. I mean, well, the other thing too is, when you're starting a small business or any business, you're going to file, your different paperwork and stuff like that. What most people don't understand is before 2008, anybody can actually originate loans. You could be a hamburger flipper, and then next week you can be originating
Really?
loans.
Right.
Yep. And then the whole
That's part of what led to the crash.
the whole meltdown happened, and they're like,
because
all right.
everyone was making loans
Oh, exactly.
and no one could cover them.
And people are buying houses too. Like,
Yeah.
you can have 6 houses,
Yeah.
and you're paying only interest on your mortgage. So
Fannie Mae's working at McDonald's
Yeah,
That's
no
exactly
shit.
right.
or Freddy's Burgers, right?
No
Fannie Mae and
shit.
Freddie
Freddie
Mac.
Mac. That's right.
Wow. See, it's an educational show too.
Oh yeah,
Yeah.
for sure.
Yeah. So what are some of the challenges that you faced? Because you recently made a change into this. So what are some of the challenges that you faced when you had to come with the decision of like, I'm going to go this direction where I'm going to go into this kind of more hybrid plan instead of just being a mortgage broker for some big, national mortgage company? What were some of the challenges that you faced or struggles that you faced having to go into that direction?
I will say, so let me give you a background of what's happened in the last couple of years.
Yeah.
So before I landed at the company that I'm currently with, I was with a company that also a mortgage bank that was like a call center type situation.
Oh, okay.
And you were getting fed leads. And so I think if I were to still be there, I don't think I would be invited to this show.
Right.
Because it literally is.
No,
you're
probably
a
not.
Yeah, you're a W-2.
Yeah,
You're
just
getting fed leads.
You're
You're-
just a real employee at
Yeah,
that point.
you're picking up your phone
Right.
and you're typing up on a computer.
Right.
And you go home, you clock out for lunch, clock back in, and you don't really like screw around within that guidelines. You come in at 8 o'clock, you leave at 6.
It's like working for a big bank.
But now it's like, so before the show started, Jeremy was on the phone with a customer.
Yeah.
Right. We talked about maybe bringing this up later, but I'm bringing it up anyway. And he was like, "Hey, I'm going to work on your loan. I'm doing this podcast with some guys I just met. I don't know if it's going to work out or be
That's
super
right.
shitty or what's going to happen. But I'm gonna do the show, and then I'm when I get home, and right now it is 7:40.
When did I make that
7:40?
call?
Yeah.
Maybe 6:40.
Oh, yeah.
I don't know what time it was, but so, I just want to bring that up because he's working on his own.
Yeah.
He's for his own business. If he was working for somebody else, he wouldn't be doing that.
He'd have done clocked out and left it for the next guy.
And he
That
would.
is- yep.
Yeah, and he would just be, regular guy. But no, he's working on it after this.
Right.
Not here. We're gonna kick his ass out, and then he's gonna have to go home and do it.
Yeah.
That is what
But-
happened. That is
yeah.
what happened with my previous work.
Yeah.
I did not have access to my files, and I couldn't work remote
After hours.
after hours. So if I had a client that needed to submit an offer on the weekends, I think it was 4th of July. I went into the office at 7 or 8 o'clock at night.
Really.
A little bit tipsy.
Had a couple of
yeah.
4th of July beverage. It's the 4th of July. No one's judging.
You
me
say
here.
tipsy, I say loosened up.
Loosened up. That's right.
Lubricated.
And I had to drive all the way to work.
Yeah.
Yeah.
I'm like, wow, this sucks. I got to make a change. So
Yeah.
there's a give and take, right? There's
Yeah.
the risk
With
and
everything,
freedom.
right?
Yeah.
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 I like it.
What
I like it a lot.
What did you find as one of the easier aspects of making that transition when you were making the switch to kind of being more on the hybrid plan or more self-employed? Like what struck you? What was easier that you did not expect, I guess is what I'm saying.
Well, my background is in financial planning, so I was in it for about 2.5 years. And so when I was financial planning, I was actively networking in the community. So
Right.
people know Jeremy Mercado, J-Dog.
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 Yeah.
He's going to get new business cards after this.
Oh, for sure. For sure. It's going to have like chain on it and everything. But that's the thing is people already knew me when I was in financial planning. I was doing, life insurance sales, retirement planning with my partner. And people already knew me, which made it easier to start going out there and get my name out again. Because in the last year that I was with the previous company, I was not allowed to go out there and prospect myself.
Oh, really?
Right.
Yeah, I was banned because I would just disappear in the middle of the day. I'm like,
Yeah. You
hey.
couldn't be a hunter of work.
Yeah.
You just had to take whatever they gave you.
Which is funny because I would totally be making my old boss so much money.
Right.
How do you
Yeah.
let me just go out there?
And we've talked about that
Yeah.
in like 5 episodes about just he wanted to be a leader at his company and his leadership.
Yeah, that was
Leadership.
a management-driven
Yeah,
company. That
they-
was not a leadership-driven
Yeah,
company.
the management just wouldn't
Yeah.
let him do it. And if they would have, he could have stayed there and probably been making them jack, been making him jack.
Yep.
Oh yeah,
Guess
Yeah.
what? They were micromanaging him so much. He was like, "See ya."
Yep.
yep.
Adios.
That's exactly what
move-
happened.
See ya.
It's yet another example of a giant corporate company using policy to reduce the experience for both the employee and the customer.
Yeah.
Yep.
So
It just doesn't work out.
yeah. So now that you're into this, what are the biggest challenges that you have now that you didn't have before?
I have a question.
Go ahead.
Hold on. We got to introduce him here.
What's going on?
We've got a surprise producer.
Okay.
My 10-year-old son Grant
Oh shit.
has decided to finally get up the courage.
No
and
pressure. Better be a good question.
Peek up on the microphone here.
How do I buy a house?
How do I dump my parents and take their house?
That's right.
What do you do if you make a huge mistake on something? Like, what do you do to fix it?
Well, it depends.
As a
on the
loan
extent.
officer,
Ooh, you own up it. You own up to it.
Yeah.
you just have to call the customer and be like, "Hey,
Oh yeah, for sure.
look, I made a mistake. We've got to move on." What's the process there?
It's very scary actually if you make a mistake because you're really you could potentially be fucking up somebody's life.
Right.
'Cause
Yeah.
there are people that are buying houses in between homes.
Yeah.
So
Yeah.
they're like, hey man, I'm gonna sell my house, and I'm gonna have I'm gonna be homeless
Right.
for like the weekend, and then we're supposed to be moving into the new house on Monday. Well, what happens if you fuck up on the loan?
Right. Right.
These people are homeless permanently,
yeah.
and
Hey, no pressure.
Yeah.
no, it's
No
legit,
pressure.
yeah.
Yeah.
And so everybody's gonna be mad because at the end of the day,
You're mad too.
Oh, yeah.
You're mad
yeah.
too.
And the thing that's very scary with my job is guidelines change every day. So with your line of work, Mitch, I mean, there are probably some code where you can't use certain pipes, right?
Yeah. I mean, we've got code that we adhere to, but code changes real slow.
Okay.
And
in
so
your industry?
Yeah. Yeah.
Let's be honest. If Mitch makes a mistake and floods someone's house, they're not. I mean, they may be homeless, but Mitch is paying for it.
Right.
Yeah.
Like my mistakes are.
Let's be honest.
Yeah,
you
my
know?
mistakes are costly.
Yours are
in
life-changing mistakes,
It really is.
and this
yeah,
is
mine are costly in a dollars and
minor
cents way,
inconvenience.
right? Like
Yeah.
if I make a mistake, I'm flooding somebody's house. If
Yeah.
you make a mistake, they don't have a house to flood.
That, or like, let's say somebody does not have, they only have enough to buy the house. Meaning they only have a certain amount of down payment and closing costs.
Yeah.
Let's say
Right.
they have like 15 grand.
Right.
Well, when you're buying a house, you're a homeowner. When you bought the house, did you put down a deposit, like an earnest deposit? It's like a good faith, right?
Yeah,
Right.
of course.
Hey, I'm interested in buying your
Of
house.
course.
Don't sell it to anybody else.
Yep.
Yeah, and it works the same if you're building a new house. Hey,
Right.
you've got to. The bank wants you to have interest in the loan.
Yep.
Interest, not in the percentage.
Right.
Say, hey, yeah,
A vested interest.
We'll do
Yep.
it.
Yep.
Yep.
We'll do it. But yeah, you've got to write us a check for $75K,
Dude,
or whatever.
especially when buying a brand new house.
Yeah.
A new build.
Yeah.
Because the deposit on those is huge.
Yeah.
And if something gets messed up, usually if there's a valid reason for you to back out of a contract, you can actually get that earnest deposit back.
Right.
Yeah.
But if somebody screws up royally,
You could be in trouble.
the client would lose that money.
Right.
And they have nothing they can't do anything about it.
Yeah.
Right. Right.
But
Yikes.
so this is what makes a good loan officer from a bad loan officer.
right.
So kind of answering your question about what happens when mistakes happen. Well, one, you really try to do your best to not screw up because you could lose your license. You know, with
Attention to detail
attention to detail, that's for sure.
at this point.
Because the thing that's scary is we don't push things, we don't paper push anymore. We do computer push.
Yeah.
Yeah.
So everything's electronic.
Yeah, you can sign your signature.
Yeah.
And then it's just a click and just click, done.
And
Now-
that's the danger.
Now that
It is
is
scary. That is scary.
Well,
First
that
time
is-
I did it, I was like, what the
Mhm.
is this?
that is one of the benefits, though, of working for kind of under that quasi umbrella that you
Yeah.
have, is that's their role, is to like they're going to build that process
So you
and-
don't screw up.
and they're going to basically hand you the right paperwork. You just have to get it filled out correctly. Not to say mistakes can't
And I'm
happen.
sure they still happen.
Yeah, but that's kind of their role, is to help shepherd along that overriding process.
So that's the other thing. So let me add to that. Yes, they provide the framework, but as a loan officer, you are in charge and responsible for knowing the guidelines.
Right.
Oh,
Because-
it still falls on your shoulders.
Oh, for sure.
Yeah.
Like there are some things where here's the framework on how to sell a basic mortgage, but not everybody's situation is the same. So if you screw
Yeah, of
up and you
course
don't
not.
study, if you don't teach yourself guidelines,
if you
learn.
I was gonna say if you don't stay up on the guidelines,
Exactly.
for sure.
you could royally F up on
So
somebody.
let me ask you a question. So did they? How do you stay up on those guidelines? Do they? I mean, are you part of a group that gets emails when they're updated from that company, from the government? I mean, how does that work?
Yeah, so typically the government would release new guidelines to the out there, right, industry wide. So there's going to be some newsletters out there.
Okay.
But the situation is, it depends on how good your company is at staying with that guideline.
Okay.
Because if the guidelines change and they don't pass it on to the loan officers, now
Right.
you're screwed.
Yeah, I was
Yeah.
gonna say then you'd be in trouble, right?
Yeah. For example, so my last company, there is a loan program that's changed, where you can average out credit scores now. Before, you take the lower of the two
Right.
applicants. It's still to a certain extent
When you say applicants, do you mean the two people
that are,
that are
on the loan.
applying?
Yep.
So the average, so there's three major credit bureaus.
Equifax, TransUnion.
So you got 3 and 3. You average those, and then those two people get them, and then you average that, or
So before, we would take the middle lower score of the two people.
okay,
So one person could have everything above 700, and the second person could have a 500 credit score, and then two 600 credit scores. We would use the 500,
Right.
which
Yeah.
sucks.
So
which by the way, if you're watching the show and you don't know, check your credit score, because if your lower one's 550, you got work to do.
Yeah.
That's right.
You know,
And like when we built this house, they took
this
The
was
lowest-
this was a long time ago.
10 or 11 years ago.
Yeah.
So this was after 2008.
But
Yeah.
if, like he said, they're changing them every 6
They're
months.
changing them all the time. But like when we built this house, they had to take, of mine and my wife's, they took our lowest credit score.
Mhm.
But then they also approved us based off of one income, and it was whoever's income was the lowest.
Yeah,
And so basically it was a kind of a double measure of security. Like if this loan goes belly up,
Conservative.
yeah, we want to make sure that we're approving this off the lower of the two credit scores, and if they were to get split up, we want to make sure that the lower of the two incomes can afford it. And I thought it was really admirable. I thought, man, if they would have done this before 2008, they probably 2008 would have probably never happened.
I'm sure that was changed after 2008.
Right.
I'm sure they were like, oh, okay, shit, this is what happened. We've got to make a change here.
Yeah.
It's changed now too from what you were just saying about the income part. So how it works is the credit score would be, it depends on the loan program, but you can average out the loans, the credit scores.
Yeah.
Interesting.
But on the income now, the cosigner, so let's say mommy and daddy and the kid's trying to buy a house, newly graduated from college, $30,000 a year.
Yeah. First off, just let me say, I'm not loaning any of them money.
Yeah.
No,
Like,
gosh,
I don't give a shit. So if the
my
parents,
mommy and daddy didn't help me with my house, I'm not helping
not
my
because
kids with
I don't
theirs.
mean because of that, because I don't trust that kid that just graduated college.
Right.
If mom and dad want to sign on the number 1 line, okay.
Oh yeah, for sure.
If they're signing number 2, I don't. No,
Right.
that kid's not getting any money from me.
No.
Yeah.
Just personally.
But the mom and dad could very well just co-sign.
Right.
So let's say mommy and daddy makes $150,000 for the household.
Yeah.
So if Sally, the daughter, makes $30,000 a year, and she's got good credit score, mommy and daddy also have a good credit score, but her debt to income is pretty high. So then you could actually bring in somebody that brings in a lot of income, and then we can count that.
Yeah. Yeah. That's getting back to a little bit scarier with the back kind of towards the 2008 type of stuff.
I hope not.
A little.
I like
bit.
my job.
First
So,
off, yeah, 2008 was a shit show.
It was.
And so in 2008, I was doing new construction.
now it's
so
gonna be
2008 was brutal.
it's gonna be a little cyclical, right? So
Yep.
Not that bad though. There's been no cycle that hit 2008.
you wouldn't.
I
think
mean,
so.
when you go back and look from
Yep.
1965 to 2008, that
Right.
cyclical cycle. When it gets to 2008, I mean, it's a new cycle.
Yeah.
So if it is, and there wasn't anything before,
Right.
I mean, if it turns into a cycle, when is the next one?
Yeah.
It's not right now.
No.
God, I hope not.
No.
I hope not.
Is that
Right?
Is that one of your fears as being new and off and into this and everything? Is one of your fears having a housing market fluctuation like that?
Well, that's where you kind of design your career, all right? So we had a refi boom, in the last 2 years.
Yeah, for
Rates
sure.
are so low, everybody's making a killing.
Right.
But everybody was doing a lot of refinance because a refinance would pay the same as a purchase.
Right.
And those are a lot easier. You can get those done in like 2 weeks and get it, get paid.
Yeah.
And the thing is, that's funny with our industry is we actually do really well in times of uncertainty. So right now with the war that's going on, the rates are actually decreasing.
They starting to go back down again.
It's going down a little bit.
Yeah.
Right.
And I don't get that either. This is a complete off tangent. So when we built our house, when we were getting ready the construction loan was closing and we were going to, get into our permanent loan, the lady was like, okay, these are your terms. This is that, blah, blah. It was 4.5%.
Yeah.
And I'm thinking, what? This was literally 4 years ago. I'm like, what? Janine and our credit scores were insane.
Yeah.
I would think mine was like 740 and Janine's was like 780. Okay.
Look at you.
We've been married 22 years, 18 years this next year. So it's always been her and I against everybody else.
That's
right.
awesome.
Right.
So our credit scores were always great. Well, so, and I'm like, what do you mean 4.5? I see rates are at 3.
Mm-hmm.
What do you mean 4.5? She's like, well, you don't own a home. Yeah.
I'm trying to.
I know. I sold a home. I'm renting a space from myself to build this. What do you mean? No, you're at 4.5. And I was so mad, but there was nothing I could do about it. So, we went ahead and did the deal. And like you just said with the refinance, I waited 6 months. I think it was 6 months we had to wait. And the refinance, and they were like, oh no, we can get you for 2.4. Yeah. 2.4. I was like, at the time, I was so mad at everyone like you.
Oh,
no, nothing personal.
I get it.
But this, I was.
Right.
But then you don't understand the ins and outs. You don't understand. Everyone and I understand everyone has to make money.
Right.
That's the whole scheme of everything. If everyone's not making money, the machine's not turning.
Yep.
Well, and,
Okay.
and the credit score thing can be kind of weird too.
Well,
Like,
and that's-
what helps you in some areas hurts you in another. Like
Yep.
you don't have enough debt. So
Yeah,
your
I was
credit,
like-
Yeah, trade lines. Yeah.
Yeah, I was like,
Yeah.
what do you mean I don't? That's basically what they were saying. It was like, no, you don't own a home.
yeah.
Or like a car payment.
Yeah, you're
Yeah.
like, I don't own a home. I don't have any car payments. I have this house. I can refi for 2.5, but you're going to get me for 4.5.
Yeah.
And I mean, you just have to kind of swallow your pride and be like, okay, I'll just wait the 6 months. And, in the grand scheme of things, it wasn't that much money,
I mean-
a couple $1,000, whatever. But it's just like
Right.
at the time. But if you have a good loan advisor, they
J-Dog.
J-Dog.
they can explain those things to you, like, hey, and the lady at the time, I won't say who she was, but I'm asking her all these questions. I mean, I'm not an idiot.
She's so by the book. She's not even helping you.
Yeah, this is my second home.
Yeah.
I know I'm not an idiot.
Yeah.
So I'm just hey,
Depends on the day.
true. So I'm just rattling off all these questions, and and to have a good loan advisor that's helping you.
Right.
That was one of those lessons I had to learn, because when we bought our first house, we didn't care.
Right.
We were 22. Who cares? You're just getting a house. But then you learn that. But now hey, and that's part of this show. Part of starting a small business is you have to vet people. You have to know what they're giving you.
Yeah.
You know what I mean? Vet everyone. Have a good loan advisor.
Right.
Have a good plumber.
Have a good
Because you'd be in deep shit if you don't.
whatever he is.
No
Plumber.
pun intended.
Yeah, no pun intended.
That's right.
It's just, you've got to have people that know what they're doing helping you
Right.
all the time.
Right.
So to add to that, though, like, what makes a good loan officer, right? Communicate. You're not going to be annoyed, so you're going to have a really long patience, because you're dealing with people. You're not just dealing with investors. You're dealing with first-time home buyers that are freaking out.
Yeah.
They don't know what the hell's going on.
Right.
Second-time home buyer
It's still
that
confusing.
don't know. They're like, what? When she told me that, I was like, what?
Yeah.
I thought I knew. I thought I was the shit. I knew everything. Nope.
No.
Didn't know.
That's why you hire a real
Maybe
realtor.
if I had known
You get a good one.
J-Dog,
Dude,
then I
right.
would have known,
Oh, you guys are
Right.
so nice. And then, like, dealing with, you're dealing with the mistakes. You own it. So when
Yeah.
you're dealing with, this goes for any business. If
Yeah.
you royally screw up, own it.
Yeah.
Do not hide. Do not ignore your phone ringing.
Yeah.
Just swallow the frog.
So you want to hear a crazy
That's great.
Yeah.
Swallow the frog.
you want to hear a crazy story about owning a mistake.
Let's do
right?
it.
So I've been plumbing for 20 years.
God,
One of
you're
the things, yeah.
Yes.
Over the hill, right?
Yes.
So one of the things that plumbers have to do is we install bathtubs. And a couple of weeks ago, I was installing a customer supplied bathtub.
You or one of your guys?
I was.
Okay.
Me personally.
Okay. So if you fucked it up,
and-
I'm ready to ready to get on you.
Yeah, and this is in a finished house, and so in a finished house, you can't use a full-size bathtub. You have to use a multi-piece. It's going to have like a base and then a back wall and two side walls, right?
Yeah, probably
So-
above the floor rough.
And they're fairly expensive.
Yeah, they
It's
are.
about $800 for this
Yeah.
set, right? So
Fiberglass.
customer, yep. So
Fiberglass.
customer provides it, and I'm getting it all put in. First time in 20 years,
Cracks.
I drilled the holes in the wrong spot for the valve and the tub spout. Just flat mismeasured,
Dude,
misread my tape measure. I don't know what it was. I mean, they were perfectly in alignment,
Bro.
just not in the right
the
spot.
beautiful thing about owning your own business is nobody's going to fire you, right?
Right,
the
right.
client might
The
fire you,
client could
but-
fire me. Right.
The reason I
That's more
laugh-
important than losing a job from my boss.
The
right?
reason I laugh so much is because do you remember when we were kids? And I say kids when we were 20, and you'd have to. So the modular would come out to a new construction job site, and I mean they would be like, "Okay, this is what you got to do."
Yeah, you'd
And they'd
measure it
give you the
twice and
pencil,
measure
and
it 3 times,
yeah,
and you would
you'd
not
measure-
cut it.
And if you effed it up, literally when they would almost fire
that was on
your
you.
ass.
Yeah.
If
Oh,
you had
no.
had like one screw up before that,
Yeah.
you were gone.
So
I mean, it was a
Mul-
rotating door.
multi-piece
That's why I laughed
kit.
so hard.
right, multi-piece kit, and I just drilled a hole in one of the 4 pieces wrong.
That's what you do.
Was it
And-
the back piece or just like a?
No, it's the valve side.
Oh
right.
man,
So
brutal.
so the first, like the moment I realized it was wrong, the first thing I do, customer's not on site, she's working.
Where did she get it from?
She bought it from a supplier. I don't know, like Home Depot or Lowe's.
So
or
you
something.
snuck off to Lowe's.
Like a
So,
general?
No. I pulled out my phone. I took a picture of the mistake, and you can see like here's the drain holes, and then here's the valve hole. Like,
Oh
like,
my
off,
God.
right? Like it's bad. And so I took a picture of it, and I texted her, and I said, "You're never going to believe this. 20 years in the industry, and I've never made this mistake, but I just royally screwed up and drilled this in the wrong spot." I said, "I owe you a new tub wall kit. Where did you buy it? Because I have to go get you one right now."
Sold out.
And
Yeah, probably right now, right?
No, yeah. With the pandemic, they're very hard to find.
Yeah.
And so I'm all this is going through my head, right? Like,
Yeah, you're like, I'm
believe
going to
it
have
or
to
not,
drive to KCK Lowe's. I'm going to have to drive to Wyandotte County Lowe's. I'm going to have to drive to,
who knows?
We're
like,
talking an hour away.
Yeah, believe it or not, the cost wasn't running through my head as much as like the hassle to get
to get
these.
it. Yeah, to get it.
So I text her.
I'm sure a 3-piece upper is probably not too bad.
She replies right away, and she says, "I have a spare set of wall panels downstairs. They shipped the first ones that showed up. There was a crack in one of the panels. So as long as the panel you need isn't the cracked one, then we're good."
How
You got to be
lucky.
the luckiest son of a bitch
I
I've
go
ever
down.
met.
Yeah,
Wow.
I go
Right?
downstairs.
Wow,
Right?
Sure.
I go downstairs, and sure
Marcus
enough,
in the back right now is like, this motherfucker. God, son of a lucky.
I go downstairs, and sure enough, the panel that I need is not cracked. It's the other side that's cracked. And so I drill it in the right spot this time, put it all on, and everything's good. They gave her the other wall set for free because the one wall set was cracked.
Did you give her a little kickback for having it?
No, she didn't. Even, like
what a
I
dick.
didn't. I mean, I didn't have to. She didn't ask. She was just like, "Hey, this is karma working out. You were honest. You came clean. I had the spare set. Like this is just
Easy.
This is just the way that karma works, right?"
Wow.
So
Dude, that is one thing about that is never assume how the conversation is going to be.
right.
Yeah.
Make those tough calls, and I don't know if this is going to lead us to the next section.
It's okay. No, just
Maybe.
keep going,
Maybe,
dude.
yeah.
Just go
But-
with what you go with your gut.
But you know what? When you never assume how the conversation is going to go, so just do it.
Right.
And what is going to take your business to the next level
Right.
is one step progress, even if it's one little step every single day,
Yeah.
right?
Yeah.
And so this is one of them is if you have to make that phone call and you don't want to call that client, do it because you don't know what's going to happen. They might be completely understanding.
Yeah.
You know, I've had those where this is not really a screw up, but there are those, you know, in this environment with interest rates and whatnot, rates go up like out of nowhere.
Yeah.
Right?
Yeah, and they're out of your control.
It is out of my control, but
yeah.
You're the
according-
messenger.
yeah, and you get shot a lot.
Yeah.
According to the client, you control everything. Which,
Shooting the messenger.
Yeah.
I didn't want to laugh, but it
oh,
was
for
just
sure,
funny,
dude.
man. It was
You get
just
shot
funny.
a lot, man. And that's the thing is you're going to talk to a client. Hey, you're looking to refinance 2.4% interest rate. And what happens if the rate goes up next week?
2.9 by the time you close.
Yeah.
Oh, even worse. It could
Yeah.
be from 2.5%, especially in new construction. It could go from 2.5%
Yeah.
to 4%.
Yeah, those dudes,
Right.
they rotate that so much. I mean, I know when you do a refi, sometimes, you know, they'll lock you in, say, hey, but a refi is different. You know what's going on. This
Purchase
is the
too.
money.
Yeah.
This is, you know, but yeah.
Make sure you lock it in.
In a new,
Make sure
brutal.
you lock it in.
Well, and I'm trying to think when we built, and again, 10, 11 years ago, lots
it was
changed.
probably locked in.
We had like a 60-day window, if I remember right.
Yep.
They kind of said, okay, your window starts now. You can lock in anytime in the next 60 days. And so we were able to like call or check online what the rate was, and then we were taking a gamble, like, okay, if we lock in now, it might go lower later, and then we kind of lost out. Or if we lock in now and it goes up, well, we played a good safety.
Yep.
Yeah.
So, but at the time we were building, it wasn't moving, but maybe 1/10 of a point day to day. So if there was like 3/10 of a point swing over that entire 60, like it kind of didn't really matter for us.
Yeah,
But
and it was
today it's a little bit more volatile.
Yeah, it was different back then.
Yeah.
Whereas
Most
now it's crazy. It's just literally insane.
Oh, here's the
Yeah.
danger too. What if you lock too early and the lock expires? So the lock expires.
Oh yeah, your builder runs into lumber shortages or something, and
Yeah.
now I can't get in.
Either
yeah.
that or,
So are you calling them like, hey, sorry,
and that comes out of the
or did
client's
they call,
pocket.
or did they
Yeah.
call you and they're like, hey, this is going later, and you're like, oh, I don't know what to tell you.
Oh, dude. If
well, I
you're-
mean, what's the circumstance?
So if you're a good loan officer, you're going to be on top of that. So you're going to be doing a review of your pipeline. And you're going to look at, okay, this lady's lock is going to expire in 7 days. So what can cause the lock to expire is, if let's say appraisals. Appraisals
Ugh.
take 3 weeks, 4 weeks. And what if you only lock it for 30 days?
Yeah.
And the average appraiser, I mean, there's a shortage of appraiser.
Yeah.
So, and they're all getting old.
Yeah.
So if you need job security, become an appraiser.
Yeah.
Hey guys,
Yeah.
become
no
self-employed.
kidding.
Yeah,
Become an
No
appraiser.
kidding.
and you can
Yeah.
make bank,
Yeah.
right? But let's say the turn time is longer than 30 days
Right.
because they're so busy. Everybody's trying to buy a house, and your lock is only for 30 days. So I don't want to get too much into the weeds, but those
okay. Get
daily
after it.
interest,
Yeah.
the daily interest beyond, you're going to get charged, right? So let's say you're 30 days locked, it expires, and you're 10 days after your lock.
Right.
Well, you're getting charged interest based on the total loan amount. So if your loan amount is $1 million, it's a bigger gamble. Times
Ouch.
that by 10.
Ouch.
Yeah. And if you're not closing it within a certain time period, if it takes you 60 days, that's 30 days worth of interest.
Yeah.
Right.
I hope Marcus is paying attention to this episode.
Yeah.
Marcus is thinking about getting him a new house.
Yeah.
I'm sure.
Let's go.
We've talked about it.
Call J-Dog.
I mean,
He knows who to call.
He better be after this is all done and he's edited it. He better watch it a couple
I have
times.
right, exactly.
You know what I mean?
Dude, I
have a
might
ton
have
of
scared the shit out of him to buy a house. He's like, oh my God, there's so many different things.
Yeah.
Well, you're saying the worst. Taking
You know what
accounts
though?
on other shit.
You are scaring him, but if you have a good loan officer, they're going to tell you all that up front. Like, hey, look,
Yeah.
this is what's going to happen.
You can't change reality. All you can do is inform yourself
That's right.
better
You can
about it, right?
prepare. You can prepare for reality.
Yeah.
And communication, man.
Yeah.
Own your mistakes and communicate
Yep.
in the worst times.
And this
Yeah.
has kind of gone from a little bit of a
A rabbit hole.
business owner to more financial advice, and that's great.
Yeah, but it's still
I love finance.
It's still
Oh, that's-
great
It eats me
productive
up,
stuff,
dude.
right?
It eats me up. I
Dave's,
love it.
Dave's a
Yeah.
finance geek.
I love it, man.
No,
All I
yeah.
do is read finance, study. I love it.
We'll have to talk about like crypto and investments too.
You do all that.
NFTs.
I've
you
got
understand
some
all that stuff?
cryptos.
Let's go.
Yes,
You
I got.
understand that crypto stuff?
Oh, hell yeah.
Look at him.
There are actually some
Yeah.
mortgage companies
It's just-
now that are taking.
It's just
Same
money
thing
off of
stuff.
crypto.
Yeah.
The only thing I hate
There's-
about crypto is how volatile it is. I mean, I bought
Right.
some just as an example. I bought some Ethereum Classic. I think it was $64
he's
when I
got
bought
money,
it.
boys. He's got money.
It was like $65 when I bought it. Right now it's been, and for the last 3 months, it's been trading at like 30.
Right.
So it's like I lost. I didn't lose money because I didn't sell it. I'm hanging on to it
Yeah.
Yep.
because I think it's obviously
Right
gonna
now
go.
is the best
to
time
the
to double
moon.
down.
First off, if you're gonna get into some classic or some smaller stuff like that, I don't want to give financial advice, but now might be the time to do
Oh,
it.
yeah.
So
Yeah, there's
for
when-
entertainment purposes only.
entertainment purposes only. I mean,
Yeah.
I do it because I kind of like to do it. I'm not.
See, you could be a moron like me. I bought AMC at its peak, thinking it's going to peak even higher, and that's a great way to cut your investments by 50%.
Oh my God, let me.
Yeah.
I have a story for this.
Dude, it happens. It happens to
Dude.
everybody.
So there's people. So there's this guy. There's a guy in a different state because I used to be licensed in all 50 states.
Right.
So I'm doing business all around the country. So there's this guy. He's like, hey, J-Dog. He didn't really say that.
Hey, J-Dog,
It
what's
sounds
up?
cool.
Yeah,
though.
what's up, dog?
Yeah.
He's like, hey, I'm thinking about refinancing. I said, fantastic. Are we doing just to lower your interest rate, or are we doing some cash out, tap into the equity of your home? I am tapping into the equity.
He's like, I'm mortgaging this bitch to the hilt.
That
What
is
do you
exactly.
got?
Oh my God.
Don't tell me he mortgaged his house to buy.
First
Don't
off,
tell me
oh,
that. I was
I-
thinking the same thing.
I know guys that mortgage to the hilt. That's their philosophy
Oh.
to make money. That's another conversation for another day.
Well, we can talk about wealth building strategy. If you're borrowing your money at 2%, 2.5%,
Yeah,
and
to
you're getting
invest at 6.
8%,
Yeah, that's different.
great.
We're not getting into that
So
today.
this guy,
And that's a whole nother show.
That's a whole other show. You know what? I will say this.
What
We
did he
talked
do? He
about
bought-
I don't want to interrupt Jeremy.
go ahead.
I'm going to let him go right after this.
Yeah.
Yeah.
go ahead.
But we talk about having the guests on again in like 6 months to see how they're doing.
Yeah.
Maybe we have him on in 3 months to talk about just investment strategy.
That's
And
Maybe.
then-
I
like that.
And then later,
I like that.
I like it.
Sidebar
So,
show.
oh,
Go
hell
ahead.
yes.
Go ahead, Jeremy. I'm sorry.
I'd love to. I'd be honored. He bought some AMC. All of those things in Reddit.
Mitch
What?
Jr.
What dollar amount did he buy
It was
at?
probably
He
Mitch.
YOLO'd it. I don't remember. But
YOLO'd it.
oh my God,
That means
you only live once, baby.
Yeah.
yeah.
That
yeah.
means you only loan once because you're never going to
Oh,
get loaned
God.
again.
You know what? When you're playing craps too, there's a yellow.
Oh.
It's the
Dude,
same thing.
this is one hell of a story though because it worked.
We got time. Go
It
after
worked?
Get after
It worked out in his favor.
Did it?
So what did he buy? $30 or something?
Oh, dude. So I don't know how specific I can get. I guess I'm not with that company anymore, so I don't care.
Well, and you haven't said the guy's name yet.
Don't
Oh.
say, as long as you don't say any names and give approximate numbers, it doesn't matter.
It is upper 5 figures that he cashed out
Okay.
Okay.
at a good interest rate.
Yeah.
And this guy bought some of those Reddit stocks.
Right.
And also some crypto.
Like GameStop
Like Shiba.
or whoever. Shiba.
Yeah.
Shiba and
he bought
Doge.
Shiba.
Oh, yeah.
He bought Doge before the spike too.
Before it exploded.
Got bigger
Yeah.
balls than I did.
Yeah.
I didn't have the stones to do it. I was
And
like,
it's funny
no.
because he's actually into trade. He owns a business.
Yeah.
And he is a blue collar.
I love it.
Yeah.
Owns
yeah.
owns the company.
Yeah.
And he bought a
Made better decisions than you,
he
Mitch.
bought a really nice boat.
Right.
Nice.
Well, that's good. Good for him. I mean, the stuff
Yeah.
works out for anyone. So, full
Yeah.
disclosure: whenever I invested in crypto, it was only $1,000, right?
Do opposite of what Mitch does.
Right. So I put 1,000 in. A week in, I'm up $300, and I'm like, hell yeah, up 30% in a week. This is great.
Yeah, except for paying
Down
taxes.
70.
Except for you're paying
And
35% taxes on
Now
that.
I'm down.
Dude, it's
Yeah.
so stupid,
So-
the taxes.
It's brutal.
Yep.
Man.
You have to keep your tax
I'm in-
strategy involved when you make small investments like that.
Yeah, I'm intrigued with crypto, but I'm not savvy enough to really even make
You
good
gotta-
conscious decisions. So
So going
There-
back to
You got to have some money.
there's guys that'll waste
gotta
$1,000
have
on a
capital,
lot
huh?
more stupid stuff than that.
You got to have
so,
capital.
Yeah.
Per
If you wanna-
Marcus.
if you wanna
yeah,
make room.
You
Okay.
do. You do.
So,
but this is for the audience. The best bet you can make is on yourself. So
absolutely.
kind of going back
Well,
to
on yourself
you know,
in your own home.
We were
right?
just
Oh,
talking
yeah.
about that, Mitch.
Yeah.
Yeah.
That's the thing.
Yeah.
is
Marcus and I were just having a conversation about that on Friday.
Yeah.
the what?
Where to invest your money. Like, so we were,
Self-training.
well, what we were doing, we were running a hypothetical. Like a hypothetical scenario. Let's say a person has $10,000 to invest
Yep.
somewhere, right? At a working class person
Mutual
with
funds,
$10,000 to invest,
Yep.
you could plug that into a mutual fund, or you could plug that into some kind of investment and
30%.
get maybe 8 to 11% on
Index.
your money,
So that's
Stock
only going to
index
turn
funds.
into 11
Yeah.
grand.
right?
At
So
10%.
so at 10%, yeah, you're going to put it in for a year, and at the end of the year, you turn 10 grand into 11 grand. Big freaking whoop! You
Yeah.
made $1,000, right?
First off, that's not how you look at it. You look at it as
I understand.
if-
Compounding.
Hey, in 5 years,
I understand.
in 5 years, that 10 grand is going to be 16 or 17,
Right.
and now I've done something. And it really only works if you're going to take that money and then do something else with it later.
Right.
He was saying like working at your. Go ahead.
So
Mitch.
where we were coming to though was like if you're looking for faster returns on your money, if you invest that into yourself, if you start a small business or you invest in a small business in some way, you can literally turn that 10 grand into 20 or 30 grand with your
Sweat
and
equity.
this is your
Or
sweat
sweat,
equity.
yeah.
This is true like sweat
Hard work.
equity.
Yep.
So
So you can work that money and turn it into significantly more than you would if you just threw it into a fund. So
You can, and my rebuttal to that would be, so earlier before the show started, we were talking about Marcus doing side work.
Yep.
And you're like, hey, Marcus,
yeah.
don't do side work.
Now I
do
do
it.
side work for my wife though.
You know what I
yeah.
mean? You know what I mean? But realistically, in a year, can he take that 10 grand in side work and make 11?
Right.
Maybe. Maybe.
Wouldn't be worth it if you were
Maybe.
only making a grand.
Usually,
That's facts.
so the articles I read that are usually like, hey, invest in yourself. They're usually talking about you have a steady job and then you take that 5 grand and then do a side hustle with
though.
it.
Yeah.
To try to make it more. Usually that's what they're talking about.
Yeah.
The easy way, and this is more of an upper middle class thing, I would think. If you're going to take that money and turn it into something, then you invest in mutual funds and
Right.
stuff like that. Now, if you, and I don't want to demean anyone, but the poorer you are, the easier it is to take that money and make something with it because you're probably not making a ton of money at your job.
Right.
yeah,
You know what I mean? So
Right.
the percentage is higher because you're not making as much to begin with.
Right.
And that's just that's not set in stone. That's just another way to think about it.
Yeah.
So
yeah.
this is something that you need to consider when you are starting your own business. When you're starting your own business, you have no support whatsoever, right? And so you don't have any benefits.
Right.
Okay.
Yeah.
So you kind of have to come up with this. So there is always different ways to mitigate risk. So what you're talking about is like the passive approach, right? So
Mhm.
invest it.
Yep.
Well, that's not bad either, because what if your idea completely flops, and let's say you're like in your 40s and you don't have that runway for compounding to work.
Yeah.
Right.
You
So
don't have
that-
that launch pad.
Yeah, exactly. So what I would recommend is like not financial advice for entertainment purposes
No,
only.
and that's what we talk about all the time on this show. These are not set in stone ways. We have gathered all this information. Jeremy has gathered
Yeah.
it. I've gathered it. Mitch has gathered it. We're giving you all of this information. Then you are responsible for the decisions that you make.
Yeah, and so what you want to do is you want to do one passive and one active. So let's say you have 10 grand, just like for your example. Out of that 10 grand, I would split it up. $5,000, put it into the market, and that's it. Just let it ride. Because
Right.
5,000 invested in 20, 30 years compounded, it's going to be a significant amount of money. Now take that $5,000 and invest it in training, right?
The other 5.
Yeah.
Like you say, like training, like courses.
Oh, courses, equipment,
Okay.
right?
Maybe teaching online classes in videography.
Right,
Okay.
right. Because the thing about it is, if you invest in equipment or invest in training, the training one is really good ROI if you're in sales.
Yeah.
So I always tell people you're always in sales. And 2, the number one highest paying profession is sales.
Yeah.
I don't care if you're a dentist, you're a surgeon, you are
You're a salesman.
whatever. You're a salesman.
If you're in service, you're a salesman.
You sold yourself to your significant other.
Yeah, that's a fact. You're in sales. Anything in life.
That's
you're doing
exactly right.
Yeah.
Sales.
I did it without
Right.
knowing it.
I sold
just
myself
like-
for me to be on this podcast.
Easy.
I oversold myself to Mitch. I was like, "Hey, dude, I am a badass loan officer. Let
Yeah.
me go ahead and be on your podcast."
Then he
And
shows up, and
and he
we've been
bought
working with him for an hour and a half
And
just
he
to get him
bought it.
prepped to
Thinking
be on
about
the
it.
show.
Oh yeah, for sure.
He needs a permanent spot. That's what he needs.
Oh, dude.
Maybe.
we need a.
Is he
yeah.
working for my spot?
We went. No.
Oh, no.
If he
Dave,
takes my
you're-
spot, I'm
you're in
taking
there.
your spot.
It'll just be an awesome like podcast with like everybody. Dude, 3 people, like 3 guests, like that Logan Paul, that podcast.
Yeah.
Dude, it's just a bunch of people in
Yeah.
that podcast.
People love it.
What a shit show.
People love it too.
Oh,
I don't
it's awesome.
understand it.
I don't know. Like
I mean, I
taking half.
I
Of
do
10
understand
grand, I don't
it.
know if that is going to get you far as doing the whole 10 grand.
Well, when Jeremy talks about that, he's talking about long-term investment.
Okay.
Right.
When
Gotcha.
you guys were talking about it the other day, because I know we have
Fast
talked
return.
about this, but
Yeah,
you're
yeah.
thinking 5 years.
Mm-hmm.
You're
So-
thinking 5 years, which would be
Did
for
you run the
me
numbers?
Well-
would be stock index fund, would be index funds. That's just what I would do because I feel safe doing it.
Oh yeah.
And listen, if you don't feel safe doing it,
And you've done it before.
yes, but if you don't feel safe doing it, and you're going to be, people don't talk about this. If you're investing money and every night you're sick to your stomach and you can't sleep, you don't have the stomach to do that. Okay?
Right.
If you can't sleep for a week, don't do it, whether it's making you money or not. You have to do something that you feel comfortable with so that you can live your life in addition to
Right.
making those
That's exactly right.
investments.
Right.
Yeah.
Because if you're sick and have diarrhea and you're throwing up and
Yeah.
you're just like, oh, I can't stand that my $20,000 is invested. Oh my God, it's not for you. Okay. Because you may be making money. It's making your life worse. Okay.
Yep. More
That
money,
was-
more problems, baby.
Yeah, exactly. And,
Yeah.
and there are, that's what makes America great. I feel like is there are opportunities for everyone despite their situation.
Dude, I love
Yeah.
America.
You know what I mean? You could take that 10 grand and buy your wife a salon or rent her a salon and she could be making you money off of that money. Okay? There
Right.
are 100 different ways
There's 100
to take that
And
money
you can do that with.
and move it. And she could be renting booth space.
Yeah.
You know what I mean? There are literally
But
15 different ways you could invest that money.
let me bring
Not
this
to be
home.
getting off on that. I mean, are we
No,
running
no,
on
no,
a tangent?
no,
Are
you're
we
fine.
all
We're
like,
good. We're good.
Are
Let
we
me-
on 3 hours of time right
Oh,
now?
it's
let-
fine.
Let me bring this home and make it real for every single person out there, real quick.
First
Jeremy,
off, that
what
doesn't work. That doesn't work.
what is a conservatively accurate rate of return on a investment right now?
8 to 10%.
8 to 10. So we're gonna
Stock
go with
market.
we're gonna go 8.
Yeah.
Okay, that's low.
I'm gonna give a rebuttal. If you're talking whole life,
5 years.
whole life insurance policies are 4.5, and that is like the lowest.
That's the lowest you can
of
go.
the average.
Right.
Okay.
So on average, 8 to 10.
I
Were
would.
you going to use
stock
8?
market. Yeah,
I
let's
would.
just do the
Yeah.
stock market.
Yeah.
So-
Stock markets.
In the last 100 years.
I just
Ma-
ran some very
7
real
to 8.
numbers.
Mutual funds average over 7 years. They say 8%.
Right. So here's some real numbers for you.
Mutual or 401ks double every 7 years. That's based on 8%.
Right.
Man, we have just totally gone from small business
Well,
Let's go.
to investing.
But we could be talking.
I might have met my best new friend right here.
Let's do it.
We could have been talking over people's heads as they're thinking, well, I don't have investments, and I don't think I'm ever going to have investments, or they're never going to amount to nothing. So
That's okay.
let me give you a real life example of the differences here. If you go buy a car for $25,000 and you sign up for a 60-month note on that car at 4% interest, okay, that's pretty good interest. Your payments are going to be $460 a month, and at the end of the 60 years,
It's worth $5.
you're going to have it's worth less, but you're going to have invested $27,625. Okay? So,
I'm with you. Just this guy he's got my funny bone.
well,
I don't know what to say.
hang with me for a minute.
I'm
so,
with you.
60 months, you've committed to a $460 a month investment.
Let's go.
And in the end of it, you've invested $27,625.
Yep.
And you have a car that when you bought it was worth $25. We don't know what it's going to be worth at 60 months later. In this market, it might be up a little bit, might be neutral.
Yeah.
Probably
Up right now.
probably going to be a little down later
But
on.
on the average is down.
Down a little bit, right? So take that same $460 a month and you invest it at an 8% return, and you just take $460 a
Over
month
5 years.
and you just start plugging it into an investment
Yeah,
for
how
5
long?
years.
For 5 years? Is
5
that where
years?
we're at?
What's the number?
$34,175.
I like it.
Okay, now let me-
Over 20 years?
well, I'm not gonna go that route with it.
You're not
But-
gonna turn me down on long-term investments.
No, I'm not turning.
I love me
I'm
some
not gonna-
long-term investments. Compound interest is if you're
So-
freaking 20 years old, compound interest is your best friend.
I guess what I'm saying
Right?
is under the loan status, you've invested.
This is coming back on Mitch here in about 2 minutes if he doesn't understand.
Under the loan status, you've invested $27,600, and you're left with an asset that probably isn't worth $27,600. Under the investment status, you've invested the same $27,600, only now you're left with an asset that's worth $34,000.
That's the business we need to start. We need
So-
to start a credit card company.
Right.
And
I
charge
got
people.
a buddy of mine that'll probably be on a guest on the podcast that was a VP of a credit card
Oh,
processing
let's
company.
do
First
it.
off, we ain't
That's
got,
the guy you've been telling me.
we
about.
ain't got the cash.
So,
I mean, I love the idea,
but
none of us got the
for,
cash.
for
right?
a lot of our listeners
takes
who
hella,
might be
huh?
thinking that
Oh,
investing
man.
is a little over their
You're-
head,
they
there
wouldn't
is
even.
there is a very realistic example. You want to go buy the 5-year-old Dodge Challenger that you see on the used car lot on the corner that you think your wife's going to really dig. Well, what would she dig more? An asset that's undervalued in 5 years, or being over $10,000 up on your investments in 5 years?
Yeah.
So that's the big difference that can make a royal difference in the long-term scheme.
It depends
of
on the
things.
woman.
Right.
That's true too.
Yeah.
That is very true.
If you don't got a rock solid woman by your side,
gonna be
it's
like,
going to
"Ooh,
be
a
really
Challenger,
difficult to be
baby, let's
successful
go."
doing anything.
Yeah.
Yeah.
Man.
Yeah.
Yeah.
First off, I just want to say I love the conversation.
Yeah.
I love where it's gone.
Yeah.
I love that basically this has gone, if you start your business and you have money, this is taking you to the next level.
Yeah.
And we talk about this. We haven't talked about it a lot on the show, but we talk about it a lot off air.
Yeah.
About, hey, look, if you're a young man, young woman, whatever, and listen, I don't want to say young. If you're 40 and you haven't been investing, this is not on small business. You need to get into investing.
Today's the
Whether
time.
if you don't own a home, the most safe investment you can make is owning a home. Okay? If you're going to be there for more than 7 years,
Look at
6 years,
Well, I don't know.
I mean, you're going to get your money
You're
back.
going to have to be in there for a while.
You're going to get your money back no matter what.
So
I can't remember what great investor said. The return of my money is more important than the return on my money.
Mm-hmm.
I think that was, it wasn't, it might have been Buffett. I can't remember. But the number one safe investment is your home.
Yeah.
After that, long-term investments like, 401k. And Mitch, how many times have we talked about it? If your guys don't have freaking 401k,
They will
I'm
have it
giving
by
you,
their 1 year.
I'm
Give 'em a
giving
time.
you.
You can't
time
even
on
enroll
it.
in a
I'm
401k
giving-
before
Time
1
on
year.
it.
I'm giving you 3 months. If they don't have it in 3 months, I'm going to destroy you on this show.
They
In
will
front
have
of
it
everyone.
by their 1 year of employment. I
Okay.
can guarantee.
Hold
that.
on. So
Okay.
there's like two sides to it. I'm going to add to that.
Don't defend Mitch. I'm trying to get his guy's retirement.
No, I got you. I got you. I've got a guy that could set up your guys in a 401k.
I got a guy.
He's
It's
got
just-
3 guys. I've been giving him phone numbers for a month and a half.
Okay, guys, lay off of Mitch. Mitch,
So-
I got your back, man.
Yeah, it's because he
The-
wants retirement. That's what. I mean, he's not stupid.
Dude, a
I've
house.
taught him a little bit, you know.
There you go. I mean, a house in our industry, I mean, is considered forced savings. So in
Yeah.
America, I mean, there's a
Yeah.
lot of people that 80%, I believe, I don't know, I haven't checked in a minute, but 80% of Americans don't have $1,000
right.
to their name.
Which is insanity to me.
That is insane.
But it's very
He
real.
said 80%?
Eight-
Oh, yeah.
yeah.
Insanity.
I don't want to stereotype.
When you think that you don't have money,
Look at one of your friends, like
i-
4
i-
of your
if
friends.
if you just Google, hey, who has what are the average savings in a 401k? What are the average savings of retirement? What are the average savings in a checking account? Then I mean,
Right.
the realism sets in.
Well, and yeah, you can
Holy
walk around
shit.
anywhere in some
It's legit, man.
quasi public place, and you can start to identify, again, without making judgments on people, you can start to identify that you're probably better off than most of Americans, no matter where you're at.
Yes.
So
I don't know if I say that. Okay, so when I go out, okay, I drive a 2012 red truck.
Yeah.
Okay,
Yeah.
when I get out, I'm wearing usually ratty jeans
yeah,
and a Carhartt shirt.
But he's loaded.
And
yeah, but you can tell by a person.
Janine and I we have done great.
That's
okay.
what I'm saying. It's not about judging people. It's about their actions and how they carry themselves and everything
No,
else.
let me finish. So, and then I look around and I see someone that acts like they have money. And that's the real problem with America is those people that are acting like they have money and they don't
They
have
live next to the
freaking-
Joneses, man.
Yeah, they don't have 5 cents to their name, and it's about personal responsibility
yeah,
and saying, "Hey, where am I?" Just like Jeremy was saying, those people don't have $1,000.
You know what's
Right.
funny?
You know
That's
what? Instead of
crazy.
trying to pretend like you have money, and I don't want to turn this into a financial show, even though I've tried 50 times with Mitch off air about making it about finance. Personal responsibility is another aspect of having your own company.
yeah.
If you don't have personal responsibility, you can't run your own company.
It's step
Okay,
one.
you can't be successful.
Step one.
Exactly.
It's step one.
You can't be successful, and then if you want to, and then you can't hire employees,
Yeah,
and you can't make it through the steps, and you cannot grow to be something bigger than yourself.
yeah.
Okay, so if you're seriously thinking about being successful, having employees, doing all those things, you have to look at yourself in the mirror and say, just like Mitch said, the personal finance prep,
Yeah.
episode 1. If you can't do those things, I shouldn't say if you can't do those things. I want to say you have to do those things in order to be successful.
Yeah.
Dude, can I add to that?
Oh, of course you can, Jeremy. Get
So-
after it, man.
No, I got you, man. J-Dog.
J-Dog.
I
I don't have my nickname yet. No one's come up with it. You know what? I shouldn't have said that because now I feel like I'm going to have a really shitty nickname.
Target.
later.
I got a target on your back for that. Anyway, go ahead, Jeremy.
No, man, like, it's very real. If you cannot manage $100 or $10,000, let's say, you
Mhm.
can't manage $1 million.
Exactly.
And I like to refer to this, but Jay-Z, there's a line that says, "I'm not a businessman. I am a business man." Right?
Yeah.
He
I can
is a
play it for you
business.
if you
Yeah.
No.
So
Give
here's
you
the
a couple
thing.
bars ahead if you want.
Yeah, bro. So, like, think of it this way. This is what I recommend a lot of my friends who are either self-employed or business owners.
Mm-hmm.
I do this myself. Every morning, I open before I open Facebook, before I open whatever, I open my banking app because you cannot operate on a negative cash flow.
Right.
I mean, I guess you can leverage, right? That's technically negative. But if you check your bank account and it's not where you want it to be, you need to be pissed off and you need to work your ass off that day.
Disgusted. You need to be
Yeah.
disgusted.
You're like, what the fuck? I've
Yeah.
been hustling all this time and I have $5,
Yeah.
right? And the thing is, what you need to do if you are in that place, it's not hopeless, right? So what you want to do is you want to say, I am J-Dog LLC. I am Mitch LLC, right?
Yeah.
And you need to run your own, like, if you hire someone like yourself as if you are the one managing your money, would you fire them or would you keep them?
Right.
Mm.
Right.
Right? If you are thinking like, wow, the person managing my money fucking sucks, fire them, you need to look in the mirror and say, shit, I need
Yeah.
to change.
You're fired.
You're fired.
Right.
But
you ever hear a crackhead say, well, I need crack, but I don't have the money,
Don't
so I
let a
guess I'm just not
crackhead
going to have
hustle
crack
you.
this day? No, they're going to go out. Like, a crackhead will out hustle you any day of the week.
yeah, man.
Yeah.
Finish that
So,
thought, Jeremy.
By any means
that's
necessary.
That's
Yeah.
a great thought, dude.
That is a really good.
Dude, so that's what you want to do is like
We're
kind
gonna
of
end the show on that. That
Yeah,
is, I mean, that is great.
Yeah.
tying it back to like self-employment. Like one of the most difficult things I think is like one of the largest struggle besides the paperwork. I mean, I kind of dodge that because I am with an employer. Is your money, like creating? It's not even just building up the savings. It's the mindset. Because if you don't have the mindset and you worked your ass off to save $10,000 or let's say $5,000 and you get to live off of the $5,000 because you minimized your expenses, and I can say, oh, I can live on $5,000 for 2 months because I've minimized everything. Dude, if you don't have the mindset of managing your money properly, that
Yeah.
$5,000 you'll blow through it in like 2 days.
Yeah.
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 I
Well, it's
I can blow that in an hour.
I couldn't have. I mean, you can't say it any better than that.
right.
That's the millionaire mindset that we talk about all the time.
Let's
go.
Yeah.
You
And
have to be saving that money. You have to be moving forward. You have to make that sacrifice.
Yeah.
Yeah. And
Just like he said,
it's just
you
like we
have
talked
to
about.
have that goal.
Just like
Yeah.
we talked about in episode 7 with the community involvement work. If the habit's to be there when you're big, the habit has to be there when you're small. It's the same with managing your money. If you can't manage $100, you're not going to be able to manage
How you
1,000,
do something
10,000, or
so
a million.
everything.
Yep.
Yeah.
Money.
So-
And this isn't a money management show. It's a
No.
is a business management show.
No, it's getting your mindset in the
Yeah,
right position.
But
so,
Jeremy has said it 100% correctly. If you can't manage that, and like we talked about in the preparation step number 1, I mean, if you can't manage it,
You're
And
fucked.
it's not going to work.
so
So
the-
you have to take that first step literally
One of the-
and learn to manage your money
Yeah.
if this is really something you want to do.
correct.
one of the biggest problems that people have when they start thinking conceptually
Damn,
about
Jeremy.
managing larger
Get
amounts
outta
of
here.
money, people forget that there's this big gap, right? People think, oh, million or even million is almost like on social media, especially if a guy has $1 million, he's still not all that cool, right? Like they're wanting tens of millions or even more, right? Gary Vaynerchuk, I just saw a reel, Facebook reel or a TikTok or something.
400,000.
Yeah. The top 1% of earners in the United States make $450,000 a year.
Yep.
Yeah.
And we don't even notice them. Like we don't
Yep.
even
You're not
recognize
a
them as
millionaire.
being
You fucking suck.
And you know what
Yeah.
those people are doing? They're taking their yacht to fucking Italy.
right.
And they're fucking you know
So,
what I mean?
but-
They're cruising.
but
They're-
what I'm
they're living the high life.
What I'm getting at with that is for all of our listeners out there, they keep thinking, well, if I had $1 million, I'd be more responsible with it. Well, the top 1% in America are earning $450 and up.
Yeah.
It's not $1 million topic
Yeah.
that you need to not worry about until you're a
If
millionaire.
you and your wife
it's
are-
$1,000 topic.
If you and your wife are making 200,
You're doing pretty good.
pat yourself on the back, take your fucking wife out and say thank you.
Yeah, and
Okay,
keep being
you're
smart
t-
with your money.
and
Don't be making 200
Yeah.
acting like you're making 5.
Yeah, if you do it for 1 year, don't celebrate. Keep after it.
Right.
need
You know what I
to-
mean? Look to the future, like the
Yeah.
millionaire mindset.
Yeah.
He just explained it.
Yeah.
I mean, better than probably we freaking have explained it.
Right.
I mean, just keep after it. And if
And he's never
And-
even heard of
and
the term
don't
millionaire
think-
mindset yet. So.
Yeah.
and if you and your wife listen, and I don't want to say wife, I want to say partner. I mean,
Whatever.
I want to be PC.
It's
Whatever.
2022.
You know, it's 2022. If you guys are making $150K a year and you're doing that for 3 years, 4 years, 5 years, don't go on stupid freaking TikTok or Facebook and say, "Oh, we're not making 800, we're not making 750."
Right.
Those are unrealistic numbers.
Can I say
No.
something
Be
about that?
proud of
Yeah.
yourself in 2 seconds. You can.
I got you.
Be proud of yourself and say, hey, we're moving forward. We are together. We are doing this.
Right.
Okay? We are, if you're making 150 and there's 2 of you together, you are successful.
Yeah.
Okay? That's it.
Step 9, evaluate performance, make adjustments, and improve. That's not evaluate performance, make adjustments, and double.
Yeah, no.
Improve. Steps in the right direction.
Yep.
Yes.
You don't have to.
Yeah, if you're making 150 and then the two of you get together and the next year you make 150 and $25, you've moved up.
Right.
Not only have you moved up, if you've got employees, you've paid for them to move up.
Right.
Okay?
Right. All right.
I mean,
you were gonna.
I'm
you were
sorry,
gonna
Jeremy.
Add to that.
Go ahead.
Oh, there's two sides to it. So the 450,000 makes you like 1%.
Right.
The average household income in America is like 52.
Yeah.
52K.
Yeah.
Household.
Yeah, it's super low.
Household. Right.
Household.
Yeah.
That could be like 2 people.
I mean,
you know,
Marcus makes that when he goes to the bathroom.
Oh, I bet.
Yeah, you know, he is pimping right now.
Videography extraordinary.
Yeah.
Yeah.
I
I appreciate you telling me my work's nice, man.
Yeah,
That-
bro,
that
it's
means
cool.
a lot to
I
me.
saw that ad. It's sick.
Side work.
Yeah. And so you've got these kids that are graduating college, or let's just say not even that, entering the trade, right? Kind of going back to all that. What is like a apprentice? What is a electrical?
I don't know. I will
Apprentice
give a great example. Janine and I we're 40. We got married when we were 22. Neither one of us went to college.
Yep.
Neither one of us went to college, and we make I'm not gonna say we
Bang.
You do very well for 40-year-olds.
We do very, very well for 40-year-olds, and neither one of us went to college. Don't
Right.
think you have to go to college.
Right.
Yeah.
Right.
Okay. I'm going to use Marcus as an example. Okay. Marcus makes good money. Okay. Did you go to college?
I didn't.
No, he didn't. You know why? Because he works hard.
Right.
Okay. Mitch, you go to college?
I did 2 semesters at college.
Yeah. So he did nothing at college. He got freaking drunk and hit on chicks. That's what
That's
Mitch
right.
did at Kansas
does
State.
really well.
That's what you do in college.
Okay,
though.
that's what Mitch did. He didn't
It's K-State. What else is there to do at K-State?
Oh, besides get fucked up.
nothing.
Get
that's the
drunk and hit on
nothing.
chicks.
That's the only memory I have of Manhattan.
Yeah.
And that's
the
what
only time I
You went
went
to
there.
K-State as well?
No, it was one time I visited. It was
Oh,
to hang
yeah,
out with my
yeah.
I
A
think
lot of
I've
people
been,
have been to Aggieville.
yeah, a lot
Oh.
of people go. I've been twice,
yeah.
and I got drunk, and
Lord.
I woke up on Mitch's floor with a Cheeto stuck to my
And
face
then we had to go back for a
at
court
like
date.
4 a.m. and then we had to go back for. But my point is, just like Jeremy was saying, hard work is
Hard work will
is-
immediately put you above the bottom or
It is-
the average income.
Hard work and determination is what determines your outcome.
Yeah.
Okay? I don't care if you were homeless. I don't care if you came from a family with money. I don't care if no matter what happens, if you work hard and you're dedicated, you will be successful in this country.
Fun fact, I was actually homeless in 2017.
And look at you now.
2017, yep. So,
Like
Successful.
homeless
Dude.
as in like
like 6
So,
months.
that's,
Here-
that's,
And look,
that's-
and Jeremy is successful.
Trying to be.
Super proud,
I
man.
love it, man.
I'll
I love
post.
Jeremy on the show. Fucking goddamn Jeremy.
Let's go.
I'll post.
Yeah.
I'll post
Get
this on our
Let's
We
go,
need a
baby.
little
on our Void Facebook page tonight. You can beat 50% of the competition simply by showing up and working hard.
Yes, sir.
You can beat the next 40% simply by doing things with urgency and detail. The last 10% is simply a dogfight. So you can beat 90% of the competition by showing up, working hard, and doing things with urgency and detail. Right there puts you above 90% of yours.
Entrepreneurs here that's listening to this, or future entrepreneurs listening to this show, if you just pick up the phone and learn how to tell a joke. If you pick up the phone when it rings, be a pleasant person, bring happiness. Don't be a Debbie Downer. Nobody likes to be around those people. And learn how to tell a joke. You will be successful than most people.
Yeah.
And when you're talking about how, hard work, I must add smart work. So I can tell you right now that I don't work harder than those people that dig ditches.
Say it again.
I don't work any harder. I
Yeah.
don't work hard at all compared to the people digging ditches with their, with their hand.
Right.
Right?
That's hard work.
That's
It's,
hard work.
it's very hard work.
Yeah.
But what I'm doing is
But hard work at your position, you
correct.
do.
There you go. There
You know what I
go.
mean? You're
So it has to be very
outworking.
In the lane
You're
that you're in.
outworking.
Yeah.
That's right.
Yeah, he's outworking the other people in
Yeah.
his lane.
Yeah.
And
And when we say hard work, that's a great way to put it.
Yeah.
yeah.
Hey, the other sons of bitches that are in your lane,
Yeah.
outwork them,
Yeah.
and you can make it.
Yeah.
What you want to do is really, really focus on your craft. So here's the thing that can bring value to the listeners who are probably thinking about a business idea. Think of one thing that you're good at and master it before touching or considering anything else. So I am a good example of this, okay? I want to do investments. I want to do mortgages. I started a marketing company during the pandemic, so I bought like a whole gimbal setup and all that, and I thought I was going to be a real estate photographer. I was going to do
Careful,
like,
Marcus.
yeah, I was
You
going to
got your
Right,
replacement
here,
right
here,
over
here.
here.
baby.
I'm gonna host a training thing. I'll teach.
Oh
you.
yeah, that'd be awesome. I thought I was going to be this mobile detailer that's going to build this empire. Holy shit! I've invested so much into different equipment. You know, I'd say $2,000 in mobile detailing stuff, and another, let's say, $1,000 on videography and photography equipment, which is very cheap. But had I invested the $3,000 that I spent on those things on getting some sort of training, there is a training
Yeah.
that costs like $1,500 for mortgage loan originators.
Yeah.
Right.
Dude, I could have, $1,500. I mean, you could easily make that with one loan.
Right.
Yeah.
But that $3,000, I could have easily probably turned it like $50K
Yeah.
in 1 year.
Your best
Because
investment's always in yourself.
yeah, and it's just
We
like
talked about that earlier.
you have to really evaluate what you're good at. And like, I was listening to a guy on YouTube, which is funny because I'm listening to this guy that is roofing focused channel. What the hell is a loan officer listening to a roofing
A
video?
roofer,
Right.
It's always something to learn.
Well, this guy is like, on your business name, which, you know, if you're coming up with a company, don't say roofing and exteriors. Because if you're doing SEO on Google, this is kind of like getting in the weeds, but when you are typing in, when you're a consumer, my roof just got destroyed by hail.
Right.
I'm not looking for roofing and exteriors.
Looking for hail damage repair.
Yeah. And
Yeah.
I'm looking for a roofing company.
Right.
And so if you are so spread thin, you're going to be shit at everything,
Yeah.
good at nothing,
Yeah.
right?
There's real truth. There's real truth
You know,
in that.
and now,
especially in the construction industry.
yeah. And because like, oh man, I just fixed the roof, but the ladies asked me to paint her kitchen. Easy enough. I can make $2,000.
Yeah.
But now nobody knows to contact you for roof.
Yeah.
They're going to contact you as a handyman, and you're going to get paid significantly less. So when you are going off on your own, becoming a self-employed or entrepreneur, stay in your fucking lane.
Yeah.
I love it.
Yeah.
You
Yeah,
know-
we do the same thing in our, we have a focus in the plumbing area that we focus on. And literally just today, we were getting emails about wanting to get signed up to do a slightly different branch of plumbing. And we're like, no, like we're crazy busy doing what we do. Yeah, there's a lot of money on the table over there. We could do that, but that's not in our wheelhouse.
Refer.
There's massive contractual stuff and everything associated with the other thing. And it's not our forte. So we just politely passed up on it.
You could end up building a house chasing every little job.
Oh,
Yeah.
yeah, dim. Yeah.
Yeah.
Easy.
So, we got to be kind of wrapping things up here, but
Rapid fire.
yeah. Well, what's the one topic we haven't hit yet? Biggest fear, I think.
Oh, I mean, we could talk about that. If you are starting out,
In 2 minutes, what is the biggest fear
running out of money.
after you've started? Is that your
Running out of
biggest
money.
fear?
That was one of the biggest fears. Yeah.
Yeah.
Because your
now
commission.
now that you've established, now that you've got a little bank, and okay, let's say you have the money to get past easy feats. What is the biggest fear you have moving forward with the growth of your company?
Oh, the biggest fear is always automation.
Okay.
Robots, automation.
You're talking the automation industry replacing jobs.
Yeah.
Okay.
Not just my job, but like pretty much a lot of different things.
Yeah.
I mean, they're automating burger flipping now. I mean,
Yeah.
Yeah. Did
You
you
know-
see that White Castle?
yeah. Yeah.
Burger flippers and fries.
Yeah,
man.
dude. So like,
And you're saying that's your biggest fear?
oh yeah, because I don't know how long
Well-
being a loan officer is going to be. But
Well, yeah. I mean, think about it. Like, used to have to go to a car
Car
dealer to buy a
Smart and
car.
stuff. Yeah.
And
And
now
he-
you
and
can
he
literally a
doesn't-
couple clicks online and they drop it off at your door and pick up
Yeah,
your
I
phone.
feel like COVID helped with that
And,
too.
Yeah.
and he doesn't mean burger flippers. He means the computer just doing his job.
Yeah.
Yeah.
And,
Yeah.
And
Automated home loans.
yeah, automated home.
Yeah.
loan.
But
And
here's the
they're
thing.
already out there.
Oh, there is. But here's the thing. Here's the point I was trying to make on that is,
You should start effing one up once in a while just to be like, hey, you guys can't, you can't see this coming. Just
oh
like,
yeah,
slide
no, that's
it
exactly
out
the
there.
point I was gonna make. Is my biggest fear is like automation, but there's always become irreplaceable.
Right.
What I mean is there's no robot that can replace a relationship of two humans,
Yeah.
Yeah. And
Yeah.
especially like for our generation.
unless you're like a freak and
Yeah.
you have connection with like your
I hate
doll.
if anything is automated like this, if we could go back to flip phones.
Dude.
Phones? Did I say phones? If we could go back to flip phones,
Yeah.
I would. I'd throw this son of a bitch out and,
I
drive
had
it
to
over
swing
the
by
truck.
Walmart to get some more sparkling water. All of the self-checkout lanes there, I identify the one with a real person in it.
Yeah,
and
I never go to
I waited 2 or
self-checkout.
3 times longer because
I
I'm
n-
dealing with a
You
person.
go-
I
no.
never go to self checkout.
Are you serious?
Yeah.
Yeah.
You
I'm
know
going-
why?
I look for self checkout.
They
No.
need to give me a discount because I'm working there,
Marcus.
checking my own ass out.
Marcus.
You know,
Marcus, don't go there.
Why?
So-
Because you're trying to save the jobs for.
Because people need jobs, man. And
Yeah. I
get that.
and listen, there's not there's not an infinite amount of Mitches or Jeremys, okay? There are people that man, this is going to sound awful. There are people that can't do those jobs.
Yeah.
They don't
Can't
have
or
the
choose
mental
not to. Yeah, that's,
they don't
that's
have
true.
the mental capacity
There
to
are
do those.
people
So
that-
guess what they should be doing? They should be checking people out.
Right.
And they should be
That's
getting
fair.
money, okay?
That's
And this whole freaking government push of, oh, we'll just pay those people. We'll give them Social Security or we'll do whatever.
That's not the
That-
right move.
That
for-
doesn't help them and that doesn't help us,
No.
okay? If you sit at home and collect a check, you're not happy.
Yeah, you're
no
not
matter
happy.
what
You're
happens.
not you're
If-
happy being a productive
If
member
you're
of
not
society.
if you're not productive, man, we have all these fucking side tangents all
Yeah.
the time.
Yeah,
Yeah.
we're
If
you're
digressing
not-
hella.
If you're not productive, you're not happy.
yeah.
that's right.
That's just that's mankind. That's
So-
not
Yep.
that's not black people.
Yeah.
That's not white people. Jeremy
That's people.
is
He's like this guy, this
Mexican,
color.
no,
He's-
Mexican. Jeremy told us
Filipino,
earlier.
man.
He's a Mexipino.
No,
right?
no. Let's
That's,
let Jeremy. What did you tell me your heritage was? We talked about it before, and I forgot. I'm sorry.
Oh, my great grandparents are from Spain,
Spain. He is Spanish. Okay.
but I'm Filipino.
But he's
Okay.
Filipino with a Mexican last name.
The computers don't give a fuck. Okay. It doesn't matter. Okay. Get from the self checkouts. Get from
Right.
everything. Nothing matters.
But Jeremy
We-
hit the nail on the head.
We have to help each other, and we have to all be engaged, no matter our mental capacity, whether we are
Yeah.
checking out groceries, whether we are shoveling poop, whether we are fixing heating and air, whether we are making a home loan. It doesn't matter. You have to be part of society to be happy.
Yeah. Jeremy
that
hit
just-
the nail on the head.
Those
You've
are the
gotta-
things that drive me insane. that we
Human to
don't
human
do.
relations. You can never give up human to human relations.
You know
Damn
what's
right
funny
you
about
can.
this? So
That's why podcasts are so popular, I think.
Yeah.
Yeah.
You know what's funny about that the relationship thing, you can't really replace it. So we've gone so far into like in business, right? We're always trying to automate things like the text messages, follow-ups, right?
Right.
You know what is a good differentiating factor if you're a business owner?
Give it to me, man.
Dude, what business are you in? Heating and air?
He does a couple.
So I did heating and air and plumbing,
Okay.
and now I do woodworking.
Got it. That explains the ring.
Yeah.
Yeah,
Yeah.
Got it.
okay, for whoever's listening,
Hey, check out this bowl I made. It's nice, right?
David
Pretty
Hilton,
sick.
It's my first
go to
epoxy
him
bowl.
for anything that you need.
Yeah, you see that bowl? That's why it's going to get replaced by robots because look at that bowl.
This is my first one. First off, it's an epoxy bowl. It's a little rough.
That's
I mean,
awesome.
it is. This was my first one, but I
I
wanted
thought
to
it was
bring
cool.
I wanted
I thought
to
it was
bring
a
it to
plain
the
bowl. That's
set.
good.
You know, and I'd been thinking about the problem with woodworking is the profit margins are shit,
Yeah.
and they always have been.
Yeah.
But Marcus the other day was like, "Hey, could you
Unless
make
you
me
get
a,
into making charcuterie
could you
boards.
make me a wood? Oh yeah, $10 for $12 worth of wood. Yeah, it was real smart."
Right.
Marcus asked me, he said, "Hey, could you make me a wood ring?" And I was like, "Oh fuck, I don't know." I was like, I mean, I got a lathe, so I made him one today, and I brought it.
Legit.
Yeah.
He loves it.
Yeah.
You
Just
know,
a tad bit too, but we're
It's a
working
little
on
big.
it. We're working on it.
it's a little big. I
But-
never freaking made one. I was like, "Hey, try this on." He's like, it's a
When I
little
tell
big.
you legit, I want to do like a review on Yelp or something, but like
Yeah.
legit.
But that's
so,
the thing is
So you were
the-
talking human relations.
Yeah,
and
so
that's what we're talking about here.
the
Yeah.
differentiating Differentiating. Yeah.
Yeah.
You're not
Sorry.
even.
Yeah,
We've
that's
been
it.
drinking. I don't know what you're doing over here.
No hablo inglés. Shit.
Mr. Mercado,
Don't
ladies
cancel
and
me.
gentlemen.
The differentiating factor after all this automation stuff is calling your clients. You know what's funny? One of my buddies, he owns a trash company. It's called Junkums. Okay. It's
Yeah.
got like a dumpster company.
Yeah.
Anyways,
Is it here?
it's in Pleasant Hill, I think.
I think I've heard of it.
Yeah. It's
Is
like
it
purple.
JUNK apostrophe
EM,
EMS?
yeah.
Yeah,
Yeah.
I've seen it.
It's like
Okay.
purple.
Yeah.
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 So the thing about it is, he's a business owner. He's busy. And we got Facebook now. You're going to get reminded, hey, it's your buddy's birthday.
We should get him on the show.
Call him.
That'd be pretty cool.
Oh, yeah. Yeah. His name's Chad. It's
We'll,
awesome.
we'll get some more
Is he as
info.
cool as you?
Oh, yeah. I think so.
He's
Pretty cool.
okay?
Yeah, he's cool. I wouldn't be hanging out with him, right?
Yeah.
Right.
If he
True.
wasn't.
True.
Right?
But when I called him, it was his birthday. I called him instead of leaving a happy birthday on Facebook.
Right.
Me and Mitch do that.
And you know
Yeah.
what? You know what? He hasn't sent me a referral, but here's the thing. Here's the thing.
Listen up, Junkums.
Yeah.
Mercado's waiting on that referral.
That's right. I need it. But here's the thing. After I caught up, I was like, hey, man, how's it going? It turned into like a 15-minute phone call instead of like, hey, man, happy birthday. Click.
Right.
Yeah. Yeah.
He invited me to come over to his crib out in Pleasant Hill, I believe. I think it's in Pleasant Hill. But now we're going to get caught up.
Yeah.
Yeah.
I'm going to see his kids that are all grown up now.
Yeah.
And now he's like, shit, dude, I don't know any other mortgage lenders. You're my guy,
Right.
right? So you're literally, Mitch, you're the only guy that I know that owns a plumbing company. Because it's hard for me to refer people that works for somebody.
Right.
Because
right.
like they could quit and they're like, all right, I don't have a guy anymore.
Right.
But if you run the business, I'm like, you know what? I want to get with the head because if you're busy, you got somebody else that could take care of it.
Right.
Yeah.
Well, and we keep that personal touch in our company too.
Yeah.
There's a lot of in previous episodes we talked about CRMs
Yep.
and stuff like that. There's a lot of softwares out there that will automate a lot of what we do.
Yep.
And we specifically choose not to do those because when people call in, they don't want to talk to some customer service rep that has no clue what to do other than book a service call.
Hi, press 1
Yeah.
to talk to a person.
And there's a lot of plumbing companies out there that outsource to like some rando call center
Yeah.
that they don't have any clue what they're doing.
And I think it's going to get to that eventually. But like right now, in our day and age, anyone over 30 it's not happening. They don't like it. I hate it. I fucking hate it.
Yeah. Yeah. So that's why like
It's
we
reverting.
always answer our phones.
Zero. You know,
Yeah.
trying to get
Just
someone to
like
talk.
fashion,
Yeah.
like fashion, it all comes back to circle.
Yeah. We always answer our phones with a real person.
Yep.
And we'll keep that personal engagement through the entire process.
Yeah,
So,
and that's what, that's another point, whether it's a plumber or loan officer,
right.
is like, dude, I'm going to pick up the phone.
Yeah.
I literally tell people like, oh, what's your working hours? Fucking 24/7. As
Yeah.
long as like don't blow up my phone at 2 a.m.
Call
because
me.
my girlfriend's going to be like, wow.
Yeah.
Right. right.
And
Jared
if
from
I
State
don't
Farm.
answer, leave a message. I'll call you
Yeah,
tomorrow.
or shoot me a text. And the thing is, like I said, it all comes full circle, right? Fashion or whatever. One of the things I bought my girlfriend for Valentine's Day is like a Polaroid.
One of those
The
old
cameras?
school Polaroid.
Old school Polaroid.
Yeah.
They started remaking them.
Yep.
Yeah.
Yeah.
I bought
Yeah.
my daughter one.
So it comes.
Of course you did.
So here's the thing.
Of course you did.
You know the human interaction. We have Instagram. Why the hell do we need a Polaroid,
Right.
right? And
Because people want the human interaction.
It's
yeah,
'cause
Exactly.
human interaction.
I think it's going to come back to that too.
Yep, and it's the physical thing,
Yeah.
right?
Right.
Yeah.
I have 10,000 photos in my photo album in my phone.
Never look at
But
them.
you know what's cooler?
That one's on your dash, ain't it?
Hmm?
That one's on your dashboard, isn't it?
Yeah.
My daughter's is on my dashboard. I mean, I know. I mean, I know exactly what he's saying.
Yeah.
The picture of
It's
my,
on my what is it called?
visor.
Visor.
yeah.
Yeah.
Like Layla plays competitive soccer, and the pictures of her, and then when she's little, on
Right.
my dash.
Right.
Yep.
I mean,
Yeah.
I almost
Did
got
you-
emotional there.
Yeah.
Those are more important to me than anything in the whole
Yeah.
fucking world.
Yeah, you can't replace emotional and real
No.
life interactions
You
with
can't.
with digital.
That
So,
will exponentially blow up your business.
Yeah.
Yeah.
Honestly.
Yeah. Staying human human will
Yeah.
ignite it.
Staying
Yeah.
power.
So
because
You good, Dave?
Yeah, no, I'm good.
yeah.
I'm good. I
God
mean,
damn.
I just
Yeah.
thought,
Allergies.
yeah, allergies. No, I'm not. No, first off, I'm not an allergy guy. I don't care. I
Yeah.
cry. I
Oh,
cry
that's
to
cute.
admit. I
We all
cry-
do.
First off, I cried at Mitch's wedding.
I like
okay,
it.
Mitch and I have been friends forever.
That's a story for another day.
I cried at my own wedding.
Yeah.
Okay, I've got
That's
a
good.
9-year-old daughter. She
Yeah.
plays competitive soccer. I love her more than fucking life itself.
That's awesome,
Yeah.
man.
And when I think
Yeah.
about, my close friends like Mitch, it makes me think about those things.
Yeah.
And that's what we're talking about when we
Yeah.
talk about interaction,
Yeah.
social interaction,
Mm-hmm.
business interaction.
Yeah.
Those things are more important now than they've ever been.
Yeah,
I feel.
100%.
I feel like.
Yeah.
You know
we
what I mean?
are the most connected people
yeah.
in history.
Yeah.
And I think, like Mitch and I are, when we were growing up, we were Generation X. And now they've tried to label us as millennials. And I don't know if labels are anything, but
We're a hybrid millennial.
we're hybrids. I always considered myself Generation X, but millennials are definitely, all on the phone all the time. You
Yeah.
know, I feel like, we are always, I always reach back to, photos and
That's all.
interactions and memories
Yeah.
and
Yeah.
those things. And I think that here in the next few years, those things will really start to turn and people will start to realize, oh, fuck.
You know
what?
what's funny?
We have got to get back
Yeah.
to that style of life,
Yeah.
that style of family, that style of everything. Because if we don't, we're going to be in some really deep shit.
Check
Yeah.
this out. So, I know we're wrapping up on time, but
Yeah, we are. We're getting long. We're
Yeah.
getting a little long. We got
Yeah.
we got a few more minutes.
no, it's
We
gonna be
gotta
one
wrap
hell
it
of
up.
a podcast. But
Yeah.
here's the, because I'm here, J Dog in the house. Let's
J
go.
Dog, J Dog, J Dog.
But the thing is, Facebook, you can literally just say, "Hey, look, I'm open for business. Like, check it out."
Yeah.
Right? Who gives a fuck?
Yeah, nobody's gonna watch that.
They're probably
Nobody's
gonna like
click
it.
on it.
Like 5 people are gonna like it.
Click.
'cause-
It takes me. I
Yeah.
can like it without reading it.
And the thing
Yep.
is, like, what? That doesn't give you a call to action and be like, "Oh shit, he opened a plumbing company. I need some help."
Right.
Versus going down your contact list. This is another strategy that somebody can take and blow up their business when they start. Is check your contact. Scroll all the way to the bottom. If you have like an iPhone, it'll say like hundreds of contacts.
Right. Yeah.
Mhm.
Yeah.
Here's what you do. You list it out, and I've learned this through when I was a financial planner. Start listing people out and start actively calling them. They're going to be like, holy shit, I haven't talked to you in forever.
Yep.
Even
Building that bridge back.
Exactly.
Yeah. Yep.
Even though you've been friends with them on Facebook and they see your post every
Yep.
single day, they're like,
Exactly.
I haven't heard from you. I'm like,
Yeah.
Even on like birthdays, like
Yeah.
reach out to them. Hey, happy birthday.
exactly.
Happy anniversary.
Bro.
Different things like that, and just rebuilding that relationship. again.
Here is an awesome trick that I'm going to leave your audience. And please,
Last trick.
please,
Here we go.
please steal it.
We're in
And
it.
you could actually like take this.
Yep.
Everybody knows when people's birthdays are on Facebook now.
Yep.
So put it on your calendar the day before.
Yeah.
Great idea.
Yeah. Call them up a day before.
They're going to be like, holy shit, how did you know?
How did you
Yeah.
remember?
I wanted to get ahead of the storm. I wanted to call you before everyone bombs
Did you do
on-
this?
Yeah, I've done that.
I've never done it, but I
Bro,
will say
it's perfect.
earlier you were talking about birthdays. So all my closest friends
Mm-hmm.
that I know deeply. So when I see it on Facebook, I call them on my phone
Yeah.
or I text them.
Yep.
I don't do fuck Facebook. I don't put it on Facebook. And I have about 10 friends and sometimes I miss them.
Yeah.
Because I'm not a big Facebook guy, but usually like Mitch, I text, or what did I text you this year? Because he was 40. I think I said it was something completely inappropriate.
Yeah.
I was like, hey,
Of course.
happy birthday, you old fuck.
Yeah.
Something like that.
One step closer to your balls touching the water when
yeah,
you sit down.
Yeah, it was something like that. And Mitch texted me the same thing on my birthday.
That's awesome.
You know what I mean?
Right.
But if you, and you don't have to do it for everybody, but, if you can make those human connections, and we have got completely off of small business. We are,
No, we're right on.
Completely on.
We're exactly where we
Exactly.
This
need
is
to
marketing.
we are,
be. This is
how old school
this
small
isn't
business
this
used
isn't
to
marketing.
be.
This is the way. This is the
Yeah,
way you
the
build
way-
your business.
We are
The
trying
mindset.
to be bring people back to the way it used to be. That's how it was.
It's not bringing them back to the way it used to be. It's bringing them back to the way that it works and bringing them back to the way that civilization functions on. Right?
yeah, functions normally.
Yeah. Yeah. We're
Right?
we're not used to pressing one for the like. You may be used to it, but it's not normal, and you're not
Yeah.
comfortable doing it. So keeping that human to human interaction
Yeah,
and that caring interaction is key.
yeah.
What
So-
a phenomenal episode.
Yeah.
Just to piggyback off
I
what you
love
were
it.
saying, J Dog.
What's up,
I
dog?
would say, I'd say that you'd be surprised how much traffic you get off doing those.
Oh, for
those type
sure.
things.
Oh yeah,
For
yeah.
sure.
It'll blow people up. People love human to human interaction.
Yeah.
So, guys, that pretty much wraps up today's show with Jeremy. Remember, if you like what you're hearing on the show, do us a favor and help share the void with somebody else who might be wanting to start their own company. Also, no matter what platform you're listening on, whether it's Apple Podcast or Spotify or YouTube, please do us a favor and do it right now. Go to the show and give us a 5-star review on that show. Those really help get the show in front of more people that need to see the show. So if you could do those two things for us, shoot us a review and shoot us a referral, we would really appreciate it. Again, we're not making any money on this show. This is simply out of the goodness of our heart, because we want to watch other people succeed at becoming the best that they can. So until next week, guys, we'll talk to you later. And
One more thing. Thank you, Mr. Jeremy Mercado.
Yeah, of course.
Thanks
Now,
for having me,
real
guys.
quick.
I'm honored.
You were
Real-
great. Thank you. Do you have any shameless plugs?
yeah. If
Put your-
somebody's,
do you have
if
a
somebody's,
website, YouTube, Facebook? Come on.
dude. You guys can add me on Facebook. I don't care.
there you go.
Jeremy Mercado, Jeremy Mercado.
There it is.
Jeremy Mercado.
All
Dude,
right.
thank you
Bye,
so
y'all.
much. I appreciate it.
Thanks, guys. I appreciate it.
No, really
You guys
do.
are
Thank
awesome.
you so much.
All right. We'll see you
Great.
later, man.
Love you guys.
See you guys next week.